and we're going to talk about Tyson Foods. And the reason we do that is because it's a big US listed company. It's the largest US protein producer. It was started by the Tyson family 2 generations ago. They still control it through a series of sort of pyramid and holding companies that have the control of the voting interests. But it's the market leader in the US in chicken and beef and pork, as well as being a huge player in prepared foods. So things like bacon, breakfast sausages, turkey, lunch meat, hot dogs, pizza crusts, toppings, tortillas, all of that
goes
stuff.
on. They are picking up their business. They're sort of diversifying more into the prepared food, ready meals.
So they're getting away from the slaughterhouses only and increasing
because that has actually been the area where they've received the most sort of flack lately. They're part of a class action against, there's a class action against them and a couple of other companies for collusion.
Just hold that thought, because I've just been reminded in my ear that we haven't mentioned the scale. So this is a $24.9 billion company. So that's substantial by local standards, but not enormous by US standards. Price earnings ratio 16.63. Dividend yield 0.87. So that's a fairly standard pricing kind of regime. Let's look at the share chart, because you're referring at the end there to a bit of concerns about class action suits. It's someone who is alleging that there's been price fixing in the chicken business.
Yes,
is that right?
So once again, that's a massive part of their business. When you look at the sales, that's about a third of their sales comes from the chicken business, but it's about half of their earnings. So, and that has been the part where they've actually increased their margin substantially lately. So there has been a lot of sort of focus on that.
Because the lawsuit basically says that they cannot believe that an industry that was traditionally characterized by lots of undercutting and price drama has been so stable for the last couple of years.
That, and everyone's margins have
Which
improved.
Sounds quite noteworthy. But the company put out a statement saying that's absolute tosh. They'd never heard of such a thing. You know, that really it's just a sign that the industry is maturing and realizing that it's a bad thing to cut each other up.
We'll see. So I think at the end of the day, I mean, the market has now sort of seemingly reacted to that a bit. But when you look at what the company has done for investors, it has actually done particularly well.
Well, let's go back to the chart, because there you see 5 years, it's done extremely well and it's trading. Now look, the problem is that analyst who came with that comment about that suit said that his price target was cut from like $80 to $40. He was really worried that there could be substantial downside here for the stock.
But I mean, when you look at the median expectation of, or sort of the mean of expectations of the expected price, it's still over $70, 75 sort of roughly when I had a last look. So it still seems that the most analysts are upbeat. It's either on a overweight or a buy list with most of the companies that are sort of out there in the market. And when you look at what the company particularly have done, if you now exclude the class action, they've managed their balance sheet very well. They've had a very tight control on debt, even though they are very acquisitive, and they've actually diversified, like I said, into more sort of like ready-made meals, trying to reduce their dependency on the chicken business.
And they're also a major supplier to the fast food industry.
They are,
KFC, Taco Bell, McDonald's, Burger King, Wendy's, the whole lot.
I mean, we need to remember
135 food processing plants around the US.
Exactly. We are talking here about the largest protein producer worldwide. So it's a big number.
And we know also in the US that there's a trend, as we've discussed in other shows, where people are moving away from like buying groceries to buying foods that are either made in a sort of restaurant context or pre-prepared foods that are sort of semi-manufactured already. Food services, people signing up for sort of online clubs where you get a meal delivered every evening and that sort of thing. It's becoming very much more high margin as a result, because it's moving the effort away from, yourself to someone else, but you've got to pay for that.
Exactly. And I mean, when you look at what the rating agencies lately said, they sort of have a stable outlook, even despite the class action. And they said that's basically the reason. They like the diversification into higher margin businesses that this company is doing.
Plus the dietary issues where people are wanting less carbs, more protein, etc. Okay, so that sounds like a setup which is a little bit tricky, because hot on account of all those business fundamentals, but then there's this legal action. So how are you going to call it?
Well, I think probably in this stable, it's a tough sort of industry, but Tyson Food in its size, I'd probably say it's hot for the sector. Something to keep your eye on.
Okay, well, let's go with a small confident view and call it hot. Yes.